Good morning, Jax. This is Fahad. Today is Friday, October 7th. So this is the morning video. Quick things, a couple of things that I want to quickly discuss here. First of all, here's the S&P chart. So this is the triangle that we have been showing for the last couple of days, basically all week. The same wedge formation that continues to play out. Now, it's almost 8 o'clock, and the job report for September is going to be coming out at 8:30. So let's see if this is significant enough to actually make or break this triangle up or down. It's going to be extremely volatile. I mentioned yesterday in the chat room when somebody asked that, the my view on job report is that call it politically motivated, call it anything you like, but the fact is that we have elections coming up in 2 months. Not less than 2 months. So we have really only two job reports remaining. One is today, and one is going to be the October job report sometime in early November. And so, I can't imagine Obama administration is going to let the job report to be bad. I mean, it's just not going to happen. So the data it was a little bit mixed. In August and September a little bit. So the data would suggest maybe a little bit pressure on the job report, and the ADP employment report that came out on Wednesday wasn't the best either. So you could see some pressure, some downside risk on the job report. But keep in mind one thing, that an extremely important, very good job report means that the Federal Reserve is going to hike the interest rate in December, which means the market may actually sell off on good news. But a really, really bad job report may also mean the same thing, which I don't see happening either. So basically what we need is a perfectly inline number, call it around 180 or 200,000 in payroll, and I think the market will take that as a positive. So we'll see. It could go either way. Just keep in mind we have this wedge formation. We're gonna break out either way. We're gonna go from there, and we'll get some new technical updates after this, hopefully. So either today is the day or sometime next week. Now, on the individual stock side, there's a good news out on INCY today. Here's the INCY chart, symbol INCY. So here's a daily chart. Now, if I look at the pre-market view, you can see that this string is trading about $98 to $100 a level after closing at 94 something yesterday. So here is more easier view. Closed at 94.78 yesterday and trading at 98.50 in pre-market. That's the bid. Here's a press release that's out this morning that's pushing the stock higher, and the company announced the phase 1 data of its ECHO 202 study. Which is with combination of Merck's Keytruda. You can read it all about over here, right on the company's website. Basically, the study is pretty good, and further notes on this should be presented at the ESMO conference, European Society of Medical Oncology conference, that actually starts tomorrow, and it's going to go all the way through the weekend until Sunday. So expect to see more news around this over the weekend, but the preliminary data set is out already, and the stock is already positively responding to that. I mentioned this because if you go to activity tracker right here, and if you type in Insight, and if you open my note, let's see. You'll see that back on September 28th, just before I went to Europe, I presented a very detailed, fresh, new bullish view on the stock, and I mentioned it specifically. Right here is my September 28th, and I mentioned that right here is the bottom line on this. This is what you need to keep away. After today, by the way, on September 28th, we had some good data back at that time too. I mentioned bottom line, after today's data set, I'm moving Insight, which has $16.7 billion market cap, to highest level on my biotech watch list as M&A target. Two major drugs partner with two major pharmas, both showing significant progress. So you can read more about over here. This is one of my favorite biotech stocks in the entire space, Insight. So it's finally making significant progress, and it is showing some more positive data along with the drug that is building from Merck. So expect the stock to basically gap high around 98, may push towards $100 per share. So good news on Insight, and this interesting because it's only a couple days after I presented my long-term, short and long-term bullish view. Now, with that said, the next one that's actually on my watch list, Goldman Sachs is out with a note. I don't have the full note yet. I'm trying to collect it, but Goldman Sachs is out with a bullish note on entire biotech space. You know, the XBI took a big beating yesterday. Right here's a big nasty candle on XBI. IBB took a big beating yesterday, was starting to break down. But Goldman Sachs is upgrading a bunch of small mid-cap biotech stocks today, saying that the sector is primed for upside based on both a number of data sets that are coming out, and their expectations are pretty good. And secondly, most importantly, the valuations have become more attractive. And lastly, the industry is primed for more M&A deals. So one of their favorite, and I try to take all these bullish notes from analysts, with grain of salt until I do my own research and mix my own color. But one of the small to mid cap stocks that is Goldman Sachs' favorite today is GWPH, which is GW Pharma. It's been a monster. It's been on a monster run, rising from 180 to 133. So Goldman Sachs missed this entire run, but now they're coming out at 133, and they're upgrading the stock with $189 price target, and they see a takeout value on GWPH of $350 plus. I mean, it's crazy note, but anyways, I'll try to get that full note, and it actually speaks for the entire biotech sector, not just one. We know that the crash in ALNI yesterday basically resulted in big sell-off in the entire biotech sector. We'll see if this note from Goldman Sachs causes some relief rally on the entire biotech space. So that's something to watch out for. Another thing I want to mention, and this is pretty interesting, you guys remember CIT Group, which we have been highlighting for a long time. This is a bank. And we've been highlighting that it was about to break out from this level. It's been consolidating at this level, and it's going to break out and run from here. To show you what I mean by that, let's go back to let's see, where is the activity tracker? Right here. Let's go back to right here, CIT, type in the activity tracker. You'll see all this bullish call activity that we have recorded on this. Let's open my notes. Here is my note on CIT Group, and as you can tell, back on August 3rd, I pointed out all this bullish option activity. We discussed M&A action, but this is the most important thing. Right here, I mentioned separately, CIT is currently in the process of selling. Let me make this bigger so you can see. Separately, CIT is currently in the process of selling its commercial aircraft leasing business. Rumors are Chinese and Japanese are interested in paying up to $4 billion, as reported by Wall Street Journal in June. All right, so this was a major catalyst that we highlighted. That's why we saw the strength in CIT. We've been talking about this chart for a while. Let me give you another look on this real quick. Where is the chart? Let's see. Here is the chart. Here's the most recent chart that I highlighted in the chat room. And as you can see, that it broke out through the $34 level, that it basically came back, that pulled back a little bit, now it's starting to move higher. Well, we have news out this morning that very particular catalyst that I highlighted has actually played out. The stock closed at around 36 something yesterday, and it is now trading at 38.6 or about $39 a share in pre-market. You can see it right here too. So it's up about 6% in pre-market, and the news is this exact thing that we discussed right here, that Bank of America is discussing this. The news came out last night. Here's a note from Bank of America talking about premium to book value is positive. Yesterday, Avalon announced its agreement to acquire CIT Group's aircraft leasing business for $10 billion. So here you go. The actual buyout is taking place on a significantly larger price than we originally thought, and that was exactly the bull case that we highlighted based on the comments or based on the article that was originally presented by Wall Street Journal back in June. So the catalyst is playing out as expected. The stock is rising sharply. You can see in January 17 right over here, there's very large 9,500 open interest in January 1735 strike calls. If I actually look at the if I look at the history on this, you can tell this right here on July 13 there was a major spike. This is the actual chart of January 1735 strike calls. That's when they came in. They bought over 9,000 contracts back then on July 13. They have been holding on to this, and they paid approximately $2.60 for these. And these options are going to more than double today. So it's going to be a major win for these bulls. May go as high as $40 a share. We'll see. So, anyways, that trade is working out very well. And the last thing I want to mention is Ingersoll Rand. Now, keep in mind on this thing. Keep an eye on this chart. Yesterday, the stock was performing very, very well. I mean, take a look at this beautiful consolidation, and now it's pushing against this level. So, if I simply do this, take a line, draw a line right here, price level, and you can see right here. You can see that this is starting to push against this 68 to $69 a level. Yesterday was a very beautiful candle, and despite the market down, the reason for that was because the company hiked its dividends by 25%, which was a significant hike from 32 cents to 40 cents. Not only that, the company talked about in the future they're going to be doing large share buyback programs. They're going to be basically paying down debt. The cash flow is extremely robust over here. Now, this is a cyclical housing play, so there's always some recession risk, in Ingersoll Rand, but housing numbers have been okay. So a lot of balance sheet restructuring and a very, very large dividend hike. Once again, if I go back to my notes on this, hold on a second, let me find those. Here's the activity tracker, which is always I like to go to right here. If I type in IR here, you will see that back on August 12th, I mentioned buyers of 2,400 December 75 calls. Let's open my note over here and see what we have. Here you go. On August 12th, we presented a very detailed bullish view on this as well. As you can see right here, unusual buyers of December 2,400 calls. We talked about climate, which is sharply increased from 15% growth rate to 27.5% in the first half of 2016. Industrial, which has been a trouble spot previously, is now doing well, and the cash flow is very, very good, which resulted in now company actually increasing the dividend hike. So plenty of good things were discussed on August 12th. Here's a chart that I presented on the U.S. residential HVAC sales comparison, and basically the point that I was trying to make was that right here, as you can see, that versus competitors, Ingersoll Rand was seeing significant rise right here. The red line compared to the rest of the competitors, basically that means it was taking market share away as well. So the point I'm trying to make is that the company is going to hike the dividends, and here is a note now this morning from Bank of America on Ingersoll Rand, symbol IR. And here it talks about why they think that this is very, very positive. It talks about that assuming no recession risk in 2017, the analyst believes that the forward EPS earnings estimates are too low, and so they should go higher from here based on the channel checks and a lot of different things. So for Q3, they're modestly increasing their EPS estimates to $1.29 versus $1.28 estimates. A small increase, I realize that, but it's positive. So the point I'm trying to make is you want to keep an eye on this chart. You want to keep an eye on this chart because this thing is about to break out as well. Where is the chart? Go right here. If I go here, and if I just pull up the chart of Ingersoll Rand that we discussed, where is it? Here you go. So right here, I can just tweak this a little bit, and you'll see Here we go. We can talk about this right here. This is the trend. This is the trend. This is the major volume over price resistance right over here. MACD is powering higher big time, as you can see right here. It's not oversold. It's not overbought yet. Same thing with RSI. If you simply draw the line, you'll see that the RSI is breaking out right here. So the RSI is breaking out. We have the company hiking dividends, and the stock finished yesterday with a power candle and pushing against its resistance. Pretty decent volume on this coming out from September as well. So we'll see if the more volume comes in, and we have a large bull that is sitting in December 75 calls, which sees another 10% upside in the stock. So keep an eye on this stock. I think it could break out from here and could run. Good news on this yesterday, and Bank of America is raising earnings estimates this morning. So basically, those are the things that are on my radar. You have Ingersoll Rand that is breaking out. You have INCY that is going to gap higher and probably go towards $100 a share. Major volume of price resistance doesn't come into play around 104 to 105 level. You have CIT, which is breaking out in pre-market. Expect this to go up to all the way up to, it's going to open around 38, but in this case, again, there is no major volume of price resistance until $40 a share, so expect this to run as well. And last thing that you want to keep in mind is this S&P chart with job report coming out. Let's see if we can finally find some resolution. Either the bulls are going to win or the bears are going to win. And we're going to get this resolution pretty soon. That's it.